Hello everybody, my name is Lush Eisner and welcome to Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending February 25, 2022. The indexes for the week, when it comes to Canadian and major US indexes, as well as oil, were either down a tiny bit or up a tiny bit, with big swings either way, both during the day and day to day. The words inverted yield curve have started resurfacing as the central banks are going to start raising short term rates. There's a concern that the long term bond yields don't go up as quickly, leading to yield curve inversion, which generally foretells a recession. This was happening a few years back, just before COVID, which did in fact cause a recession. The supply issues seem to be easing, which may reduce some of the inflationary pressures. In general, we're in the middle of a correction. The S&P 500 went into correction territory on Tuesday, but probably towards the end of the correction. Supply issues and the Russian problem will resolve themselves over time, and the typical 10% correction lasts 2 to 3 months before the markets hit new highs. Nasdaq officially hit bear market intraday on Thursday and had huge movements during the day, but ended positive for the day. Just so you know, bear market means down 20% or more from a recent peak. Also on Thursday, Brent crude oil hit $100 per barrel during the day. WTI hit 94. In the US, the core personal consumption expenditures price index, a closely watched inflation gauge for the US Fed, rose 5.2% year over year in January, slightly hotter than estimates and the biggest annual gain since 1983. And oil hit highest price since 2014 on Tuesday, mostly on the Russia-Ukraine invasion fallout, despite the possibility that Iran will be able to add its 1 million barrels per day to the global market. Higher oil could slow the economy, reducing the need for interest rate hikes, but could also be seen as adding to the inflation, creating a larger need for rate hikes. Russia entered eastern Ukraine Tuesday evening and fully invaded Wednesday night. Sanctions are commencing, but so far it's localized. Russia is small potatoes as far as the economy goes on the world stage, and its only important is in energy, mainly in oil and gas, and mostly for Europe. And I don't think it would cut those off because it would start losing money. The sanctions won't impact the economy of the world and only somewhat that of Russia, for example, freezing Russian government members' foreign assets and going after Russian banks. It's unlikely to escalate into an all out war. There have been hundreds of Ukrainian casualties as of Sunday, including 64 dead, but the reports are sketchy and varying. If you think this will trigger a nuclear war, you'll have more to worry about than your portfolio. I think no actual help will come from NATO because the Ukraine is not one of the NATO countries, and there isn't much to be gained by other countries other than keeping Russia's influence in check. There have been reports in the Canadian stocks. Royal Bank reported Thursday and beat expectations on earnings with good overall numbers. It was still down for the day, along with many other stocks, as a result of the Russian invasion. Next week, we have the big March 2nd Canadian Central Bank meeting where they will announce the widely expected interest rate hike, which should only be 0.25%. The earnings season is still going on both sides of the border. On Tuesday, we have BMO and Bank of Nova Scotia reporting. On Thursday, we have Algonquin, Toronto Dominion, and Canadian Natural Resources. So that concludes the report and news for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.